Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for the Small Cap Growth Conference. Our next presentation of the day is from Frontera Energy. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I am very pleased to welcome Orlando Cabrales, Chief Executive Officer of Frontera Energy, which trades on the OTCQX Best Market under the symbol FECCF and on TSX under the symbol FEC. Welcome, Orlando.
Thank you, Andrea, and thank you everyone for joining today's presentation. I'm very excited to be here today to introduce Frontera Energy. As some of you may be aware, Frontera recently began trading on the OTCQX Best Market, enhancing the company's access to broader U.S. investor base, including the U.S. retail market, offering shareholders improved liquidity and supporting long-term value creation. OTC market activity has represented around 30% of Frontera's total share trading over the past 5 years, highlighting the relevance of the U.S. market to Frontera's investor community. Access to this highest tier of the U.S. OTC markets further strengthens Frontera's ability to reach a broader investor base and enhance long-term value creation. Next slide, please. For those of you who are less familiar with Frontera, we are a Canadian public company involved in the exploration, development, production, transportation, storage, and sale of oil and natural gas in South America, including strategic investments in both upstream and midstream facilities. We are committed to conducting business safely and in a socially and environmentally responsible manner. Frontera is focused on maximizing and realizing value through our core businesses, including Colombian upstream onshore and the standalone and growing Colombian infrastructure business. Let's take a closer look at each of our businesses. Our Colombian upstream business has produced approximately 39,200 barrels of oil per day year to date and generated approximately $239 million in EBITDA in the same period. As of December 2024, we had 2P reserves of 147 million BOE, consisting of 69% heavy oil, 19% light and medium oil, 9% conventional natural gas, and 3% natural gas liquids. This figure excludes Ecuador, since we recently announced its divestment and the closing of this transaction is currently subject of the satisfaction of closing conditions. Our infrastructure business includes our 35% equity interest in ODL, which is a 260-kilometer pipeline which connects Colombia's largest oil-producing fields in the Llanos region with the Ocensa pipeline, and our 99.97% interest in Puerto Bahía, a maritime terminal strategically located in the Bay of Cartagena. In the next slide, we will take a look at some of our high-level financial metrics. As of September 30th of this year, we had approximately 69.8 million shares outstanding and a market cap of $321 million US dollars, consolidated net debt of $374 million, and an enterprise value of $695 million US dollars. Our balance sheet includes a total cash and cash equivalents of $159 million. Our consolidated net debt to operating EBITDA ratio is 1.1, and our debt to book capitalization is 30%. From a credit perspective, we have a B issuer rating in our senior notes from Fitch, while we also have a B+ issuer rating from S&P with a negative outlook. We are committed to returning value to our stakeholders. Since 2020, we have returned over $300 million to investors through dividends, NCIBs, and SIBs, while maintaining a strong credit profile and a robust balance sheet. We have also reduced our total shares outstanding by over 27 million shares over that same period of time. Frontera has repurchased over $80 million of our senior unsecured notes due 2028, reducing the balance outstanding of our senior debt to $340 million, demonstrating a strong commitment to all stakeholders. We continue to prioritize investors-focused initiatives, including additional dividends, distributions, share or bond buybacks, based on the overall results of the business, oil prices, and cash flow generation. Additionally, the company will consider all options to enhance the value of its common shares, and in so doing, may consider other strategic initiatives or transactions. I won't spend too much time on this slide, but I would like to highlight that Frontera's management team has extensive professional experience working for some of the largest players inside and outside Colombia and our industry, including BP, Deutsche Bank, Naturgas, and PDVSA, amongst others. Our management is experienced, innovative, and committed to the highest standards of governance. Frontera has interest in 19 exploration and production blocks in Colombia, where we produce approximately 39,000 BOE per day in the third quarter. Our production comes mainly from our heavy oil assets, where our largest producing asset is the Quifa block, which has averaged approximately 17,300 BOE per day year to date. Quifa has been the cornerstone of our production and cash flow generation for years, and we continue to find new opportunities to extract value and drive down costs, including the implementation of our Sahara project, our reverse osmosis water treatment facility, through which we expect to handle up to 250,000 barrels of water per day for the block. Our second largest producing asset is our 100% interest in the CP6 heavy oil block, where we have tripled the production since 2020, and which we produce approximately 7,800 BOE per day year to date. In 2025, the company has invested in the expansion of crude oil storage capacity and the implementation of new field production technologies. Frontera has also a 50% working interest in the B2i gas and light oil block, which produce approximately 2,000 BOE per day year to date. In the fourth quarter, we also spotted the high-impact Guapo-1 well at the B2i block, which targets natural gas and condensate. Drilling of this well is expected to be completed by the end of the year. The Guapo-1 well has the potential to significantly improve our natural gas reserves, including provide much needed supply to the Colombian market in the short and medium term, and help de-risk nearby contingent prospects. Frontera is focused on value over volumes in our Colombian upstream business. This approach helped us deliver 99.1 million BOE in 1P reserves and 147.2 million BOE in 2P gross reserves at year-end 2024 from our Colombian assets. The net present value of the company's 1P reserves, discounted at 10% before tax, was $1.9 billion, and for our 2P reserves, we had $2.2 billion at December 31st, 2024. In addition, our 1P gross reserves life index was 7 years, and our 2P reserves life index is 10.4 years. One of Frontera's biggest business advantages is its attractive lower cost asset base, which generates robust cash flows. Our mantra at Frontera has been value over volumes. And even though this year oil price environment has been volatile and challenging, we continue to execute, focusing on producing from our most profitable assets while also working on continuous operational improvements and cost efficiencies, aiming to become a stronger and more resilient company. We are on track to produce approximately 39,000 to 39,500 barrels per day in 2025, based on file cycle cost of 37 to 39.50 dollars per BOE. As part of our risk management strategy, we use derivative instruments to manage our exposure to oil price and foreign exchange volatility. On the oil side, our strategy aims to protect between 40 and 60% of our estimated net after royalties production, using a combination of instruments, cap and non-cap, to protect the revenue generation and cash position of the company while maximizing the upside. This allows us to take a more dynamic approach to the management of our hedging portfolio. We have entered into structured hedges successfully, securing up to 40% hedging ratio until June 2026, with sailings between 63 and 65 Brent, protecting against a drop in oil prices down to $55. We also cover 20% of our peso exposure until the end of 2025, with floors at over the 4,200 pesos level. These hedges provide us with cash flow visibility and help mitigate impacts from future fluctuations while supporting delivery of business targets. As I mentioned in my introductory remarks, our infrastructure business includes our 35% equity interest in ODL pipeline and our 99.97% interest in Puerto Bahia. The business combines an attractive growth profile and is backed by a steady dividend stream from our investment in ODL, which has received over $147 million in dividends and capital distributions since 2023. I will discuss these assets further in the next few slides. Strategically located in the Bay of Cartagena, Colombia, Puerto Bahia includes both liquid and dry cargo terminals, enhancing its strategic importance. Puerto Bahia's liquids terminal exports and imports vital crude oil and refined products from Frontera and other international crude oil shippers. Recently, Puerto Bahia completed construction of a pipeline connection with Ecopetrol's Cartagena refinery. The connection is expected to transport crude oil and other hydrocarbons between Puerto Bahia's port facility and the Cartagena refinery. You may have also heard that Puerto Bahia, together with its partner Gasco, is fast-tracking the initial phase of an LPG project, which is expected to be operational in the first half of 2026, helping address supply constraints in Colombia's domestic LPG market. The LPG project is expected to generate between $10 and $50 million in yearly project EBITDA once it reaches its target capacity. In addition, Puerto Bahia's dry terminal is the largest hub for roll-on, roll-off cargo in the Caribbean coast of Colombia. The port has significant expertise in break bulk and project cargo and has seen a strong growth in its container business in 2025, which saw a strong growth in containers volumes that exceeded 3,620 foot equivalent units in October. During the 9 months ending in September, 11,454 TEUs were handled at Puerto Bahia, representing a step-fold increase compared to the 306 TOUs handled during the same period in 2024, capturing volumes and supporting the growth opportunities in this market. Frontera holds a 35% interest in ODL onshore pipeline, co-owned by Zenit Transporte and Logística de Hidrocarburos, a company owned by Ecopetrol. ODL connects Colombia's largest oil-producing fields in the Llanos region with the Ocensa pipeline. Key ODL customers include Ecopetrol, Geopark, Parex, and Cocoa. Importantly, ODL transport around 30% of the total Colombian's crude oil production, and about 70% of Colombia's 1P reserves are currently found in the ODL service area. Over the last 12 months, ODL paid approximately $59 million net to Frontera Infrastructure in dividends and capital distributions to its shareholders. Taking a closer look at the numbers, over the last 12 months, ODL transported approximately 238,000 barrels per day and delivered EBITDA of $289 million. Puerto Bahía's total liquids volumes average 45,000 barrels per day and deliver EBITDA of $16 million. Our infrastructure business generated adjusted EBITDA of $117 million and segment cash flow from operating activities of $64 million. As part of Frontera's commitment to unlock shareholder value and enable future consolidation opportunities, we recently announced a plan to spin off our Colombian infrastructure business, creating two focused independent companies: Frontera E&P, a pure-play oil and gas exploration and production company. Over the last 12 months, Frontera E&P generated a standalone operating EBITDA of $336 million, with approximately $220 million in net debt. Frontera E&P has a net leverage of 0.7 times. And Frontera Infrastructure, which will include our interest in ODL and Puerto Bahía, and will emerge as a leading energy infrastructure business, leveraging robust cash flows from ODL and aiming to invest in near-term strategic projects at Puerto Bahía to deliver a growing and long-term revenue stream. Over the last 12 months, Frontera Infrastructure generated an infrastructure adjusted EBITDA of $117 and an infrastructure distributable cash flows of $75 million, which is comprised of Puerto Bahía's operating EBITDA and ODL's dividends and distributions received, with approximately $154 million in net. Frontera Infrastructure has net leverage against infrastructure distributable cash flow of two times. We have consistently drawn interest from investors and strategic parties who recognize the unique strengths and value propositions present in our upstream oil and gas and infrastructure business. While our business complements the other, each has its own operational profiles, life cycles, and appeals to different investor groups. The separation will allow Frontera's distinct businesses to explore independent organic and inorganic opportunities and deliver superior return for shareholders. We consider the strategic separation an opportunity to surface value that is not currently reflected in Frontera's market cap. Frontera Infrastructure will emerge as a leading energy infrastructure business, leveraging robust cash flows from ODL, and will invest in near-term strategic projects at Puerto Bahía to deliver a growing and long-term revenue stream. The proposed transaction is projected to be completed in the first half of next year and is subject to. With that, I would like to thank you all for attending, and I look forward to taking any questions you may have.
Hi, Orlando. I'm going to join you here for the Q&A. So we have
Rene Burgos is our CFO. So welcome, Rene.
Thank you, Orlando. Okay, I think you've already answered these questions, but I'm going to go ahead and read them. And there's two questions together. So one of them asks, how does Puerto Bahia fit into Frontera's long-term strategy, and what are the plans to monetize? And the second question, and again, they're both together, how does the planned spin-off of the Colombian infrastructure business unlock shareholder value, and what is the expected timeline for completion? I think it's worthwhile, Orlando, to perhaps for you to kind of share again what you just highlighted about our view of Frontera infrastructure and servicing that value.
Yes, as Rene said, well, I think I answered those questions in my presentation, but I mean, certainly we are convinced that the value of our infrastructure business is not reflected in the market cap of the company. It has a significant value which is not reflected there. So that is why we are doing that separation. In addition to that, the profile of investors for E&P is different to an infrastructure investor base. So I think by doing the separation, we will addressing that distinction between the two type of investors. The timing wise, we are planning to launch and end the process in the first half of next year. So that is the plan. I don't know if I missed something there, Rene, from the question.
No, I think that answered that. And we have another question, Orlando, that touches on what is the timeline for the LPG project at Puerto Bahia?
Okay, the timeline is we have different phases, but let's say, I mean, up to completion of the full project, it would be 2 years. So hopefully we can do it in less than 2 years, but we are doing in phases. We are going to start next year with the first phase, which basically involves a truck-to-ship delivery in the port. That is the easiest way to start the project. We have sanctioned the project financially with our partner Gasco, which as you know is a Chilean company, very experienced in LPG, with a big presence in the LPG market in Colombia. But the plan is to go up to the building of a storage of a tank, which will have a capacity of 460,000 tons per year, which is about 30% of the demand in Colombia of LPG. So that gives you an idea of the scale of the project. But the building of the tank is the final stage in this 18-24 months timeline.
Thank you, Orlando. We have another question. What are your key milestones for 2026?
Well, we haven't approved the plan for 2026 yet. I think we will announce that to the market early next year. So that is the plan. We have been working on that, of course. But the plan, I can anticipate that the plan will reflect the separation that we are planning to do next year in the first half of the year. And we do see stable production next year as we are having this year. So same level of production, similar type of activities for next year. And so that's the only thing I can anticipate at this point in time.
And again, I'll complement your earlier comment about the results for Guapo Well will be something that's a milestone for us to kind of announce to the market for next year. But again, focus on the spinoff, and like Orlando said, continue to drive value in our E&P business. I think this one's for me, Orlando. Can you explain the 56 million of debt service on FPI debt at infrastructure? And thank you for the question. So we refinanced the FPI debt back in May of this year. We raised roughly $220 million backed by our interest in our ODL pipeline interest. This is a full turbo loan So while of that 56, I would say roughly $10 million, $15 million is going to be interest. And remember, we have an average coupon around 10.5% through the two tranches. The rest is going to be amortization payments, because all dividends that come into the structure are recaptured and used to automatically repay that debt. What should be interesting for everybody is, you remember that back in May of this year, we raised $220 million, and you already see the total debt and liabilities line for infrastructure business is 202. And Puerto Rico has no debt. What we expect by the end of the year is for that FPA loan to be around $175 million, just for context. So again, the debt service is both interest, but mostly amortization as we turbo all those dividends to repay that debt. I think we have one more question here. Can you discuss shareholder returns? What should investors expect with regards to dividends and buybacks? You want me to take that, Orlando, or?
Yes, sure. Why don't you take that?
So look, we have taken a very unique approach to maximize the value for all of our shareholders. That's why you've seen that we've done very, very interesting and significant SIBs in the past. These SIBs pay a premium to the market so that all of our shareholders can partake as the company continues to deliver returns. What is important to note is our returns are completely tied to the cash generation of this business. As we plan, we provide our investors with our free cash flow forecast. And based on those forecasts, we are able to then effectively provide a line of sight as to how distributions are going to be repaid. By doing it with SIBs, we effectively are able to control the timing better, and basically the narrative to investors as we do these returns of capital in a very kind of also efficient manner to prevent any leakage for all of our investors. But that would be the way that I would kind of just answer that. And of course, our cash flow generation in our business totally depends on the current market environment, oil prices, and others. So of course, we need to kind of keep those top of mind. We have, I think, one more question here. How material could gas become in your production mix and margin structure with successful exploration?
I would say that, as I mentioned in our Beam-1 block, which is a 50% partnership with Parex in the lower Magdalena Valley in Colombia, which is, as you know, maybe you may know this, a gas-prone basin in the country. We are planning to start selling, gas to the we have been selling gas to the market at lower volumes, but we are planning to in a year time, more or less, we are planning to increase that sales volumes to the market, to the gas market. As you may know, the gas market is very tight right now in Colombia. Prices are going up, and there is a window of opportunity, a clear window of opportunity for the gas market in Colombia to be there as a producer. In addition to that, as René said, and as I mentioned in my remarks, we are drilling this exploration well, which we call Guapo 1, which has a significant upside. So potentially we may increase those volumes to the market next year. So there is an opportunity there, and we need to find our place in that new gas market in Colombia.
Excellent. Thank you, Orlando. And I think with that, we have no more questions. Orlando, any closing remarks?
No, thank you for taking the time to talk to us, and we are very, very excited to be here.
Well, thank you. And thank you to the OTC team. Have a great day.
Thank you. Bye.